Hi guys, welcome back to Cheeky Crypto. My name is Nick and I am doing an update video for you guys today here from sunny Dubai, just because we have seen a significant pullback in the market. Obviously, with Bitcoin crashing the way that it has done, altcoins have completely bled out. And so I want to kind of go into the charts, take a look at the technical analysis on Bitcoin, take a look at the news, see what's been going on, why we've seen such negative price action, and share my thoughts and opinions on what I think is likely to happen next. As I get into today's video, smash that like button. I do appreciate that. If you're new to the channel, why not go ahead and subscribe? I don't think you'll be disappointed by what you find here. Let's kick things off by taking a look at the technical analysis here for BTC, right? There's a few things to kind of discuss. So what we're going to do is we're going to kind of clear off some of these lines, and we'll talk about each of them in their context. And then the yellow box that you see here on the chart, that's quite an important one. So we'll talk about that in a moment as well. So let's get into this, right? So on Bitcoin, we have seen a bit of a top out up here on the 14th of March at $73,777, right? So we topped out at around that range. We saw a rejection there. So there's lots of selling pressure at 73K. Now, we did move down. We crashed down quite a bit. We're coming down to $60,775. This potential move, not potential, but this actual move was 17.62%, right? And it kind of shocked quite a few people. There were lots of liquidations in that point in time. We saw moves down, we saw massive liquidations, too many longs, lots of liquidity at around that $60,000. Now, as we started to recover here, a few things were starting to become apparent. We had ourselves these high peaks here, and we had a continuation of higher highs, even in this wick just over here. What this did is it allowed the bulls to kind of say, look, we can go long on the market. We've got higher highs, and that's incredibly bullish. However, what they weren't anticipating was the fact that actually all of this was a very corrective pattern. We had overlapping candlesticks, and those things are quite short term. So when we come into here, you can see, if I go ahead and just remove those, that we had this high peak over this side, then had this low peak. There was overlap between these areas. We then had this run up here, and then this collapse here. This actually overlapped this peak here. Okay, and what that meant was that you had all that overlap. That overlap basically meant that this wasn't a sustainable move to the upside. The market was grabbing as much liquidity as it could out of it. So as we come back into here, we can see one of the key and most important things that's happened in the last 24 hours. We have, of course, seen this move to the downside from the April the 8th, down here, another 16.67%, a pretty sizable amount. But the main takeaway is this wick. This wick here went down lower than our previous low. So we have a lower low, and that is going to be fueling the bears. The bears are going to be looking at that saying, look, we've got lower lows, we're going to go further to the downside. However, the same thing is true. What we saw on the up was this overlapping candlesticks. We also see those overlapping candlesticks on the way down. Okay, so it's really hard to be bearish and bullish, or both of those, in fact, on the market. If we come back in here, we can see that there's still potential that we come down to this yellow box range. Okay, that is basically 57 to $60,000, right? That particular area is the expectation from this move here, okay, coming down into a three-wave corrective pattern. Okay, this corrective pattern allows for the overlapping structures because it tells us that it's short term, and it could be, this finishing move down here at around the 57,200 to basically $60,000. Okay, so we know that there's a potential short move there. However, one of the things I would say here is that the minimum expectations were met when we went down lower than the previous low. Okay, so with the overlapping nature of things, I would say that it's very corrective. If we haven't already bottomed, we're about to bottom on this, and we are likely to continue this move to the upside. So although the bears might be starting to layer in their shorts here, thinking they've got lower lows and they're likely to go down further, I think from a technical standpoint, we're actually going to see the opposite. Now that longs have been liquidated, which we'll talk about in a moment, we'll actually see the price move up to liquidate the short positions that have been staggering themselves in or stacking up quite nicely, creating pools of liquidity in the charts. So although we look for this move to the downside here, I think ultimately, realistically speaking, all we've really done is stayed in a ranging market, bouncing between the low side of 60 and the high side of 73. Okay, so basically we're stuck in a range for Bitcoin. Now, whilst Bitcoin has been ranging between those areas of 60K and 73K, we've seen the altcoin market completely bleed out. Now, if you're a Cheeky Crypto member down in our Discord server and over at membership.cheekycrypto.io, then you would have noticed that we've had around 17 to 20 notifications firing off as the altcoin market crashed down and corrected right into the zones that I had been expecting them to go to. That means we have huge opportunities for dollar cost averaging into those altcoins that were triggered in the alert section of our Discord server. So if you're not a member, you are truly missing out on some alpha content. So why not go ahead and check it out? The links for that are down below. Okay, guys. So now we have an understanding that basically Bitcoin's market is just continuing to go sideways here. Our expectation might be a little bit more to the downside towards that kind of 57 to 60K range, but more than likely we're going to recover at any moment now, and we're likely to kind of move up a little bit higher. Anything lower than our lows down here at $57,000 would change my mind on that. It would actually tell us that we have significantly further to the downside to go, okay? Because if we were to go down lower than $57,000, it would be lower than the 1.236 Fibonacci extension level. And that would be an indication that we have further to the downside to go, where we'll probably be looking more towards the 55K, maybe even $50,000 BTC. So let's hope that we don't do that. Let's hope that we stay in that kind of $57,000 to $60,000 range, and that we do start to see some recovery from here for Bitcoin. Okay, so let's go ahead and take a look at the news. What's going on, right? So here we have another $700 million in liquidations as Bitcoin dumps to 61K. Obviously, it did come down a little bit deeper. Bitcoin went down, I think it was 60,000 and 660, something to that effect, on the Binance USDT pairing, right? And so we did see a significant surge to the downside, and it did fuel a lot of liquidations on those long positions that were stacking up. So huge amounts of liquidations did occur, lots of money has changed hands, and yeah, and at the moment, I guess the bears are feeling rather confident about themselves. Let's come back into the web here. We do see that Bitcoin is down in the last 24 hours, over 7.9%, right? Now, this obviously is our point of recording this video, or the point of this article being written. Obviously, these numbers have changed quite a bit because we did come down deeper than the $61,842. We did come down a little bit deeper than that. But obviously, we have seen a significant slippage for Bitcoin, and that Bitcoin has obviously fueled quite a few concerned individuals in the market. I'm not concerned. I have been dollar cost averaging. I was buying this yesterday. I'm probably going to have a look in the market and see what's available today. I know Chris has been dollar cost averaging. I know that lots of the Cheeky Crypto members have been dollar cost averaging and buying up some altcoins as well. So as I say, if you're not in the Discord, you are missing out. Now, obviously, along with big corrections in the market, with altcoins correcting down the way that they have done, it's no surprise that meme coins have plunged 18% over the last day or so. Now, the reasoning and the rationale behind this, why? Well, meme coins have zero utility to them, which means that they're only really going to be invested in by people who are speculating on other speculative investments, right? And so essentially what I mean by that is, you buy or you gamble on the meme coin in the expectation that, you know, price is going to go up, and it's only going to go up because you're betting that other people are also going to be buying it, right? There's no utility, there's no reason to hold it outside of price go up or price go down, right? And so it's no surprise that when Bitcoin has corrected the way that it has done, altcoins corrected the way that they have done, that meme coins bleed out even heavier. Now, that heavy bleeding on meme coins is just pure panic, because there's no reason to hold it outside of that speculative investment. So whereas they pump hard, they dump hard as well. So not surprising to me that we have seen a bit of a downturn in the meme coin market. Now, as we see, the reasons, there's actually a couple of reasons, I should say, that we find excuses kind of flying around as to why Bitcoin has corrected the way that it has done. Now, obviously, we've been talking about corrections in the market for quite some time. Bitcoin's actually holding up incredibly well versus that of the altcoin market. The altcoins, as I said, hit many of my zones that I'm expecting them to go to. Bitcoin, on the other hand, hasn't. It's actually held up quite well. Now, the reasons that we've seen these corrections in the last 24 hours, at least the ones that we can see online through the media, is Middle East war. There's potential war going and conflict going on there. And historically, that has an impact on markets. It spooks the markets. Not all wars are actually necessarily bad for the markets initially. They're actually, sometimes you do see a bit of a surge to the upside before you see the collapses. Now, I'll let you do more research into what is going on in the Middle East. It's not really my place to kind of do that in this video. I'll leave that for you guys to kind of talk about what's going on there. And, you can take a look at the historical charts as to what happens when wars do break out. I mean, you can take a look at the most recent one with Russia, for example, and you can see what the market did when that war was declared. Now, as we come back in here, that's one of the reasons that that's being kind of used as an excuse as to why the market has bled out. The other one that we've seen here is that the interest rates are, in the US are set to jump. And this one is actually something that probably resonates a little bit more with me, because there is a correlation between the stock market and the crypto market and the interest rates over in the US. Now, the interest rates in the US have been stagnant for quite some time. And when the interest rates are stagnant, price tends to move upwards. Okay, when the interest rates climb or go down, we tend to find volatility in the market. Okay, so now with interest rates potentially on the up over in the US, specifically because inflation is again running quite strongly, that is an indication that risk-off assets are going to be seen as way too high risk, and high-risk assets are going to be considered a risk-off asset. And what I mean by that is people with vast amounts of money that are looking to kind of, put it somewhere that's going to be safe, or safe from inflation, and try to kind of, maintain their wealth. What they tend to do is when interest rates go up, is they actually come out of those riskier assets, Bitcoin being one of them. Okay, so if interest rates do increase, we would expect ultimately the market to actually, decrease in value, and that will be based on the fact that it'll be too risky to hold things like Bitcoin or cryptocurrency assets. So we have to be quite mindful of that. We do still think that a pivot to the downside is likely, a pivot, of course, in either direction from its current position. So if it does pivot to the upside and interest rates do increase, then I would expect a crash. But likewise, if we do see interest rates decrease in the pivot and they reduce their interest rates, which is very unlikely to happen until later this year, early 2025 now, then you'd also find a crash, because that would only happen when there is no liquidity left in the market, and therefore people are looking to sell their assets to basically try to sustain their current lifestyles and things like that. We've spoken about this a number of different times. We've talked about this in the AMAs down in our Discord server. So if you're looking for more information around that, do go ahead and join us down in Discord. Now, if we come across here a little bit further, the Bitcoin halving is coming. And the Bitcoin halving event, as I've spoken about recently, is going to be a big catalyst for BTC for a number of different reasons. Now, Bitcoin's halving event happens every 210,000 blocks, or approximately every 4 years. And what it will do is it will halve the mining rewards that miners earn for solving the complex math problem of adding basically blocks to the ledger. Okay, it's quite a mouthful to kind of explain, but really quite simple. Basically, if they were earning 6.5 Bitcoin, last year and the year before, well, in this month, April 2024, they will actually have that halved. So it'll be 3.25 Bitcoin earned for every block added. Now, that's going to mean that there's going to be less Bitcoin for the miners to sell on the open market. Now, this is a huge problem for mining operations because they're hugely costly. So they require Bitcoin's price to continue to run to the upside. If Bitcoin's price doesn't appreciate, lots of these mining companies will shut down and they'll just be running at a loss. They'll go bankrupt and so forth. And that's a problem for Bitcoin's ledger and its decentralization further down the line. But nonetheless, for now, as a Bitcoin halving event, I don't think we're going to see anything too dramatic. We're going to see potentially volatility in the market as people are speculating as to whether or not price will go up or price will go down. And historically speaking, price has usually gone down briefly either before or after. This current move that we're seeing right now could be that move just before the Bitcoin halving event so that we can take off afterwards. The Bitcoin halving event has been a milestone in crypto history, specifically as triggering the next bullish market. everything that we've seen so far is really not that impressive if you remove all of the spot ETF plays. That stock market money, take that out of the equation, and you realize that this is only really a small start to where things are heading. The halving event is going to trigger something significantly more, specifically within the altcoin market and the broader crypto market as a whole. The ETFs, as I said, do make a bit of a problem for the crypto market, specifically if you're looking at the historical price movements in relation to the halving event. This time could, in fact, be very, very different based on the fact that the stock market money is flowing into BTC. It isn't going to roll out of Bitcoin into the altcoins, so we're going to see things run slightly differently. So all in all, from the kind of the charts through to the news as to kind of why we've seen this price action kind of volatility in the last 24 hours, it has presented itself with some huge opportunities. Also in the news, we do see some interesting things going on with Dubai, specifically where their regulator is actually trying to be more inclusive of smaller firms who are trying to get into the Web3 space. They're trying to cater for basically making sure that everyone is compliant without having to charge and cost those small companies thousands, if not millions, in fees just to become compliant. Some interesting things going on over in the US, well worth keeping an eye on it, because I do think things are starting to heat up, both in the Dubai, in the UAE, if I can get my words out, and of course over in Vietnam as well. A few other jurisdictions are working positively towards regulating this space and actually fostering the innovation, versus that where we see in the US where they're not really regulating and they're just trying to enforce and trying to stomp out any potential competition. I think we know who's on the right side of this one, but let me know your thoughts in the comments down below. Guys, I'm going to end the video right there. If you have found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, go ahead and subscribe. And guys, why don't you check out this video right here where I'm discussing what is going on in the crypto space.